Amit.
Hello and welcome to the Financial Advisor Forum's 2015-16 presented by UTI Mutual Fund and CNBC TV 18. Now, the Financial Advisor Awards were instituted with an aim to recognize and honor the very best in the financial advisor community who've been working tirelessly to create and manage wealth for their customers by providing them with sound advice, good investment plans and product recommendation. Now, as a run-up to the awards, we're bringing on board industry stalwarts and independent financial advisors across major cities in the country to discuss the opportunities and challenges faced by them, how they can expand their customer base and how they can provide better services to their customers. And so we kickstart the Financial Advisor Forum's 2015-16 this week in New Delhi.
The mutual fund industry in India has been one of the fastest growing and most competitive segments of the financial sector. Over the years, UTI Mutual Fund and CNBC TV 18's Financial Advisor Forums have showcased how independent financial advisors act as a catalyst in the evolution of the Indian financial market. Since cities like Delhi, Mumbai, Chennai, Kolkata and Bengaluru contribute to almost 74% of the entire AUM of the country, we kickstart the first Financial Advisor Forum of the season in the national capital, New Delhi, to address some of the key challenges that IFAs face and how they can best address this growing market.
Welcome to the first Financial Advisor Forum's 2015-16 presented by UTI Mutual Fund and CNBC TV 18, where we bring on board some independent financial advisors and talk to them about the opportunities and challenges faced by them and the way ahead for the industry. Now, joining me on the panel are Sandeep Parwal, the founder of SPA Group, Rajiv Bajaj, Vice Chairman and Managing Director, Bajaj Capital, Arjun Sawhney with Divitas Capital, and Suraj Keli from UTI Asset Management Company. I'd like to start with you, Mr. Parwal. With the current market scenario, what's the advice now for IFAs?
These are very good times for IFAs to build their credibility, relationship and engagement with their customers. Because these are the times when they can really handhold them on the macro basis, on the micro basis, what the opportunity the country carries, what are the things which are happening in the industry and what are the potential which is there. Everything is very promising. However, the volatility has been very high. Considering the volatility, investors are jittery. And a jittery investor needs to be handheld by his financial advisor to live for a longer goal with his discipline, with his asset allocation, to achieve his wealth creation and simultaneously explore opportunities how it could protect his capital.
Mr. Sawhney, is this where you think it's required for the independent financial advisor to be more of a advisory role, to come in to guide rather than just saying in a transactionary role? Do you think there's that need for that behavioral change?
I think it is incumbent on us as a community of financial advisors to look at our customers' financial needs holistically. It is not merely investing in equities or through mutual funds, but they should be able to provide them an all-encompassing financial advice, whether it is in debt, tax-free bonds, the extent of their allocation between these various asset classes, over time, perhaps reduce exposure to gold, to real estate, and look at a whole diversified, balanced portfolio. In fact, if they had been doing so, perhaps there wouldn't have been such a need to handhold them, because the volatility to just equities itself would have got mitigated.
Mr. Bajaj, what's the feedback that you're getting from these investors?
Yeah, basically we've been telling investors for 50 years to invest for long term, not worry about the markets. What investors plan on paper, and when they see the volatility in the markets and they see markets swinging 5,000-6,000 points within a matter of weeks, I have seen that the whole conversation changes in the whole economy. In this scenario, one has to have a very different, very tuned out mindset. Okay. So, I mean, if you ask me personally as an investor, if you don't look at me as, one of the professionals working in a financial planning firm, but me as an investor, I invest only in SIPs. I invest only for long term. Whenever I see the market falling I feel happy.
Yeah.
And when sometimes people ask me what was the index yesterday or what happened yesterday, I just keep quiet and smile, because I have probably not seen what the index was for 3 days.
Okay.
Because it doesn't matter to me for my business or for my own portfolio.
Okay.
Because if we are following the principles of asset allocation, and if my 40% debt, 40% equity, 20% cash is in place, and if I have already given them pre-month advice ki equity should be overweight, debt should be neutral, so then why you need to over-invent?
Mr. Kelly, that's a really interesting point that Mr. Bajaj brought about, for the IFAs to guide their customers to realize what kind of a portfolio this customer is, that majority of the money is, say, parked safely, and yes, 20% or 30% of their portfolio is to play around. Maybe that is required, and to maybe even get the investor to say, take a step back, don't be so focused with the markets, the up and down. Is that also maybe a need to have that kind of a switch?
That's an interesting point you make. In my assessment, I think any IFA would have a set of different kinds of customers. So there are customers, I think, who will be willing to, come and ask you this question, that now that the markets have corrected, where is the best opportunity to buy in? So they have this trading mentality, and obviously you need to handle those questions. Similarly, even in good times, if you have told the investor that, look, you do your asset allocation, invest for the long term, but the reality is that when markets are rising, many investors don't listen to that advice. So you need to go back again and reiterate the same advice once over, because now the reality is dawned on the investor that markets are volatile and one needs to really stay put. So I always say that in my experience, if investors crystallize their losses at these points, right, then they go out. They never come back to the markets. So let the notional loss remain notional. Markets will come back. Have faith in the country's growth, because that's what equity markets are all about. And so my view is that depending on the investor, you really decide what is appropriate. So one segment which I want to highlight here is the segment which does not do asset allocation despite our best attempts, and is over-invested, at higher levels of the market. And they are the most difficult set of customers to handle, because they have really put in a lot of their wealth. I've seen that in previous, bull runs as well, where investors have gone overboard, because they tend to take their own financial plans in their own hand. So I would say that, invest your time with those investors who need the maximum help at that point. And typically this investor set is investors, who are over-invested in equities, assuming that markets will rise, and now are surprised negatively with the downside.
Well, we have a power-packed panel discussion continuing right here on CNBC TV 18. Don't go anywhere. We'll be right back.
So if you look at wealth creation, it has three parts. How much you save, how long do you save, and in where do you really invest this money. So the simple mantra I can give to any financial advisor is to save regularly, save long term, invest in the stock market, average out, because that's the only way you can really generate wealth for your customers in the long run.
Welcome back to the Financial Advisor Forums 2015-16, and we're coming to you from New Delhi, the national capital. With me on the panel, I have 4 renowned members from the financial advisory community. Emotion is very attached to your own money. It is definitely important for an investor to have an IFA, so that the IFA is not connected to those emotions. Getting that across to the customer at times is tough at times, because they will feel that I can do it on my own.
See, the challenge is that everybody feels that, okay, perhaps do it yourself and do it cheaper and do it more efficient could be a sustainable way of running on things. Specialists are required, and our community, IFAs, have given a significant contribution in terms of the value, the hand-holding, the induction, and perhaps now with the regulator handling the compliances also. Because IFAs end up spending half their time facilitating the new form of KYC. So there are various challenges which IFA is engaged into. In spite of all these things, investor, over whatever period of study you want to see and whichever economy you want to see, the history proves that we don't beat markets sustainably, or a quick buck cannot be made sustainably. You could be lucky, but you can't do it sustainably. Investing is about savings and growth. Investing is not about speculation. And for savings and growth, you need discipline and allocation. That is where the IFA's role will come in play, and that is where his value will be recognized, and over the period of time, he'll certainly be able to win the confidence of his customers to listen to this.
Okay. So, Mr. Bajaj, is it really important in this aspect also to bring in this word called customization? What's the way to express it to the investor that customization is needed, and also how important is it for the IFA to accept, yes, we need customization in this field?
Yeah, I think in our community, first of all, we need to believe in ourselves more than the investor believing in us. I think that is going to happen when we approach our own business with confidence and we realize the value of our own services. So somewhere I've seen that the confidence in our community is beaten down. You know, when the market has been volatile by, gone down 700 points in one day, suddenly our eyes are not meeting the investor's eyes. Even before we've opened our mouth, we have lost the game. So why can't we be the same? Why can't we be confident? Why can't we smile? Why can't we just laugh away the market going down? I mean, are you investing, when you are investing for your retirement, even if the market is down for 3 months in a row, how does it matter? Rather, you are buying at a lower average. You know, people talk about robo-advice now. Yeah. So that is just the computer mechanics of investing. So that to that extent, yes, customization is possible through technology. But customization of human psychology. Now, find me a robo which can, make a financial plan for all of us. Okay. So, that's where I think the human robo sitting here, they are the ones who are the ones who are going to make a difference.
Mr. Kelly, I want to come to you with some figures that I have. Now, rather in a recent interview, Mr. CVR Rajendran, the chief executive of AMFI, said that, and I quote, there is a target to increase the size of the mutual fund industry to 30 lakh crore within 3 years from the current 13 lakh crore. For this, AMCs need to reach out to tier 2 and tier 3 towns. So are you seeing this picking up momentum, means more and more penetration into tier 2, tier 3 towns?
Well, the way I would, really look at that number is that there are many factors at play in our industry. So in my experience, I would say markets play a very big role. Yeah. So when markets are good, a lot of investors are happy to come in. So I would say that any number, that we look at is assuming that the markets will remain fairly robust, because without markets, we are not going to get anywhere. The second huge impact in our business is taxation. Right, so without again a conducive taxation regime, I don't think so we'll be able to build out a very large business for asset management companies either. So these two are the basic building blocks. Now, if you have these two blocks in place, you can really now start leveraging, various tools that are available at your end. So for example, I do believe that in a country like India, reaching out in a language that they understand is fairly crucial. So today, for example, when we do account statements, we do it only in English. Why can't we do it in 16 languages? Similarly, if you look at a website, why should the website remain only in English? With technology, you can now recast your entire website in regional languages should you desire. Similarly, the role that we play in terms of, education, you can do videos, you can do a lot of tools which are today available to you. And I think that will be fairly crucial to reach out to tier 2 towns. So my view is that technology, plays an entire role from onboarding of a customer. And today's day and age, it's not about just ending with redemption. It's about filing your taxes thereof. And I do believe that technology is going to really simplify all these processes. So over time, as we start using a lot of this technology and in a language which people understand, with simplified products, amenable taxation regime, and favoring markets, I think this number is certainly doable.
And I think the fundamental reason for having such a low penetration among mutual funds is our obsession to invest in gold, real estate, and fixed deposit.
Yeah.
That accounts for 80% of financial savings. So we as financial advisors have got to train our customers to look at the benefits of the financial market.
Lots more to come on this edition of the Financial Advisor Forums 2015-16 from New Delhi. We'll be right back.
I think financial advisors have a very important role to look at a customer's needs on a holistic basis, i.e. to make sure that they have a balanced allocation towards equity, debt, other fixed income products, such that any market volatility is very easily dealt with. As far as a financial advisor's role is concerned, he must use the ranges between the markets to give his clients the best advice, i.e. when the markets are low, encourage them to increase their allocation, and likewise when the markets are relatively high, to use that opportunity to move into debt.
A financial advisor needs to engage with his customers across all cycles. What I'll suggest is that you should understand your customer, advise the customer, facilitate this transaction, and keep monitoring that. And engagement at each levels will keep your customer satisfied and help him protect his wealth and generate the returns on that account.
Welcome back. You're tuned in to the Delhi edition of the Financial Advisor Forums 2015-16, presented by UTI Mutual Fund and CNBC TV 18. Mr. Parwal, if you think Indians have this mentality that, and I'm sorry to be generalizing, but is it true that, we want to feel something tangible is safe? So whether it's this gold, whether it is a real estate, which is a house that I have the keys to, or whether it is the fixed deposit receipt that I can hold in my hand and keep in my cupboard, as opposed to mutual funds. So do you think there is this more preference for the tangible assets?
Not really, because last year when the gold prices were falling and when the extra house or the flat which I had booked was not being resold and the asset class was not generating returns, it was the least preferred asset class. An investor is savvy enough to understand that, okay, where is he able to generate his returns, where can he get his tax efficiency, where can he get his flexibility. In case I want to liquidate, I should be able to liquidate. If I have more money, can I invest more?
Okay.
See, the challenge in the country is that the kind of under-penetration which we have in mutual fund industry. Yes. For a country with a GDP savings rate of 30% plus, mutual fund comprise less than 4% of the industry. Mutual funds, on the other hand, are the most transparent product.
Right.
I don't have a challenge of 10% NPA being declared by a bank in a mutual fund. They would be wound up by now. Right. And I don't have a unit 64 where I have a assured return kind of a product. So investor has to live on his daily NAV, the mark to market. The fund manager is on his toes. He has to take his duration risk, credit risk. See, we are talking mutual fund as if they are only equities. Mutual fund is about fixed income also. In fact, the larger share is of fixed income.
Mr. Bajaj, there is some figures that I want to share with you, which I got from the AMFI website. And it says the assets under management from the B15 sector grew from 1.89 lakh crore in March 31st, 2015 to 2.14 lakh crore by the end of December 2015. How can IFAs work towards getting a larger part of this pie?
Technology is useful only for one and most important thing, which is to scale up. So earlier, let's say if you're an IFA and you have been 10 years in business and you have 1,000 clients and you have 100 crore AUM, you would feel unequal with a larger player who has 1,000 crore AUM. And you would feel that ye to bahut bade log hain. But it's not the case anymore. Now you have a level playing field. Please see, different sectors. Anybody who applies his mind, anybody who has an idea, they can actually go and implement. So technology gives you that leverage. If you are in Pitampura, so Pitampura, let it be your, computer center. Let whatever investors are coming, put one or two of your colleagues who are working with you for 5 years, ask them to deal with all the existing clients. Once in a month you meet them, take care of them. You should be handling some new project. How I can capture the whole nearby market, how I can, go to a corporate and do, be a financial advisor to that corporate, open up that corporate, go into, one industrial township, let's say Bhilai township, and tie up with the entire set of investors there, have an online investment option available, and then service people on the phone. We need to be thinking differently. We need to be thinking innovatively. We need to be thinking completely out of box to leverage technology to our advantage.
Well, on that note, we'll take some quick questions from the audience. Mr. Kelly, this question is for you. It's being asked by Mr. Rajneesh Kumar. Why do I need to knock the doors of various AMCs for empanelment with them? Can't there be a single window or a single platform for empanelment with them, across various chosen AMCs through a single form or a one-time documentation?
No, that's an interesting point. And, basically what happens is that several asset management companies believe that, before you get empaneled, you need to get familiar with their specific product range. right? So it may so happen that there are certain products which may not have got covered adequately, and they may want to impart training on that front. So there are these kind of issues which come up, especially when it comes to, specifically working for various asset management companies. Secondly, if you look at the business models of various asset management companies, they are very different. So not all asset management companies can service all advisors across all the country because they may not be present. So you may get a quote, but if you're not serviced adequately, you don't have information on those products, you cannot service your customers there. It does not really help you in any manner, to just work with everyone. So that's the reason I think, we have the standard that once you have completed your NISM exam, now you're ready to work in the industry, but then you seek out, and the AMC in a way also has a way to seek out the right match as far as, empanelment of advisors is concerned.
Mr. Sawhney, this question is by Anuj Khanna. What is the correct period in years for A, debt funds, and 2, equity funds that I can suggest to investors?
Actually, you've got to seize market conditions. For example, 2 years ago, it was a fantastic time while our interest rates were high to get people to invest in debt. When tax fees were also giving you 8.6%, which is like gross 12%. So I think you've got to have deep knowledge of the markets to assess what is a good time to increase allocation. It is still a good time because 10-year yields are quite high. Even the current tax fees were at 7.6%. Accrual products. Markets are low, so it's a good time for equity investments. So you've got to have deep knowledge of the markets and assess right.
Well, that's all the time we have this week on the Financial Advisor Forums 2015-16, presented by UTI Mutual Fund and CNBC TV 18. But we'll see you next time from the IT Hub of India, Bengaluru. Until then, from the entire team, many thanks for watching.
Focus, ideate, innovate, enable.